is John Luca, who's a gold and high value item trader, and he's going to talk to us about the depreciation of the US dollar and what that has to do with Bitcoin, basically.
So thank you so much for coming as well, Gian. I must say,
thanks, Raf.
Gian's a very reputable person in the sector, and I really am looking forward to hearing specifically around the gold standard and your involvement in gold and the depreciation of not only the US dollar but of gold itself.
Okay, so guys, I want to just talk briefly about the relationship between gold and how I got into it, and also how it relates to the dollar, as Raf was saying, and also how it relates back to Bitcoin. So I started working out for Baird & Co., which are a physical producer of bars and coins. And we were the biggest wholesale producer, buying from the jewelers around London. And we were then producing bars and coins for retail and institutional investors. Now, the actual physical gold market is only 5% of what is traded. Most of it is 95% traded through futures and swaps and forwards. So we were looking at more the retail market, which you now see is the kind of market that has shifted from being in gold that has now gone into Bitcoin. But going back to the days that I was in trading, I noticed how over the years, money has flowed out from gold and into Bitcoin, but also how the US dollar has depreciated with the inverse relationship that it has, where of course, when historically the dollar depreciates, gold would appreciate. What I think is the big issue nowadays is that people are looking at the assets in the wrong way. And the way I would describe that is that gold is essentially like cash. Gold is a hedge where you put a certain amount of money, you can call it 3%, 5% of what you have, and you store that away as a long-term value play that shields you against your depreciation in your equities portfolio. It may be your Bitcoin, but generally it's your bonds, your FX, and your equities. What's now happening is people who are historically doing that for gold are taking a risk by putting it into Bitcoin. I'm not saying that's a bad risk. I'm just saying they're taking that speculation because there is the speculation inherent in Bitcoin that does not exist in gold. Gold is only a risk if you actually physically invest the money into a bank and then it becomes a bank deposit. It's not cash. If you just look at gold as a metal by itself, it's not the same. It's not the same speculative investment as you would see Bitcoin as. But then retail investors, people investing the same amount of money, they're taking that view where instead of putting 4 to 5% into gold, you can leave the 4 to 5% in Bitcoin. And why is that interesting? Because if all of the retail buyers and around 75% of the buyers for physical gold are retail buyers, if they're all coming into Bitcoin, and if all the institutional banks and hedge funds have now set up desks, which we all know it's not going to change in the future. If they put out that investment in, that's not going to change for the foreseeable future. This is something that is going to be around for a long time. I think that Bitcoin, coming from the gold side, has a real potential to do well. And I think that it's evident if you look at the long-term statistics. I can't speak for as much knowledge as Alistair and Raf have from the trading side of Bitcoin, but I can see from gold how much money is plunged out of it, how the dollar has been hit, how the Federal Reserve has been putting so much money into trying to keep interest rates low and boost their equities market and keep this bull market going to deflect of what's happening with Bitcoin because they're scared of Bitcoin having that much power. And I think it's interesting to see how that relates to gold. But I would love to actually have a few questions in the Q&A and for you guys to ask me some things related to how I think that's going to play out in the long term, because speculatively in the short term, who knows where it will go. Midterm, as Shirag was saying, I think it's a tough call, but I would still be bullish. But long term, I think it's definitely bullish, and it's an interesting market for sure to look at.
Okay, thank you for that.